Welcome back to the Wolf of Queen Street podcast series. Welcome back to the audio podcast or the video series. If you just joined us today, before we get into it, I just want to do a shout out to my sponsors, Six Figure Secrets. This is a team of guys and girls that help businesses take the next step up to get themselves to six figures and more over a certain period of time. They've been through it. They've studied everything, and they will help you on guidance on your business, whether it's social media, footprint in the digital world, or just taking a Facebook ad and making it successful. These guys will do it for you. Sixfiguresecrets.co is a place to go, and make sure you let them know that the Wolf sent you. But anyway, today I'm joined by Jono Frankle, Managing Director of Wealth Mentor. This company I've seen live at the Robert Kiyosaki event over in Australia and New Zealand, as well as at the NAC World Tour on this side of the world. They're the leading investment education provider through Australasia, and I'm super excited to have Jono on the show. Welcome, mate.
Yeah, thank you very much. Excited to be here.
No, it's great. Obviously, the reason why I want to get John on the show at the moment is we're here in an interesting time in the world around investments and property, just because there is the monkey in the room, or the elephant in the room, as most people would say, whether you're going through it, coming through it, looking at it down the barrel, but pretty much COVID and the effect it's had on the world. What is your vision or your understanding at the moment is how COVID is actually affecting our current property market? Sorry to interrupt the current show, but just to let you know, if you're enjoying what you've seen, make sure you hit the subscribe and like button. So next time another episode comes out, you'll be able to see it first. Back to the show.
Well, it's a super interesting question. I guess it's a pretty hot topic as well, because especially the fact that I guess the hot topic relates based on the economy as well. Mm-hmm. When it comes to property, I think the hurt that we're expecting is going to align with the economy, and it's probably a little while away still, because there's a couple of factors, I guess, that are affecting the COVID hurt, should we say, and that's going to be that we've got a lot of people that during the lockdown went into mortgage holidays, mm-hmm. or they went up to interest-only periods where they were in a position where, you know, they're able to sustain the mortgages or pay the mortgages. On top of that, what we're seeing is that we're seeing a few more job losses. I mean, if you jump on any of the news channels, you see 1,000 jobs here, 1,000 jobs there, and it's really sad to see. But the effects of this is going to be that there's going to be some hurt within the property market. On the contrary, though, and this is the interesting part, is that we've still got a massive demand in New Zealand. There's still a huge demand for both rental property, but also for buying property and people for their homes. So we've almost got a little bit of a juggling act coming here, where we could be seeing a little bit of a dip, but is it going to be propped up by the fact that there's that massive demand at the back end? So interesting times, certainly interesting times.
It totally is, and I totally agree with what you said at the moment. You know, there's people going through situations that I cannot understand. You know, I'm fortunate enough to not be in the struggles a lot of people are in New Zealand or throughout the world. Job losses, situations of not knowing how to pay the next mortgage, for example. Like you said, a lot of people on mortgage holidays at the moment. And the effect it definitely is going to have on the property, because you know, whether they were saving up and they're renting and wanting to buy a property in 6 months' time, that's not going to happen, because all their savings have to pay for their current rent or so forth. Or, you know, young people that's not too sure about the property game, that might be scared off about, is the property going to go down? Is the property going to come up? Not having a realization of what to do next. So there's definitely an intriguing time around the effects that COVID had on the property. But one thing I think that's going to happen, and someone can call me out on it, is that, you know, some of the biggest investors throughout the world and over the last 10, 20, 30, or 40 years, those guys continuously invested, whether it was up, whether it's down. They never broke for 3 months, 6 months, 9 months, or 12 months. I think they just pivoted slightly on the approach on, if we're talking about property, on how they invested on their property. Did they go on a smaller buy, or did they go on a bigger buy, and so forth?
Yeah, I mean, 100%. I mean, Buffett, his most famous quote, you know, be greedy when others are fearful. Yeah. You know, that's essentially what we're going to be going into. So for a lot of our clients, it's going to be a matter of, you know, there might not be a lot of the deals now, but there are going to start to come. But if the deal stacks up, and if that deal runs by whatever your investing rules are, or your buying rules, then you should be still buying, because we're still buying positively cash flowing property.
Yep.
What we're doing is we're not buying property and hoping for a market to increase in value. We're buying property that we know is creating an income for ourselves. So whether the market goes up or down, that's essentially a bonus for us. We are looking to buy below market value and creating value. So it's really important as investors that we still look out, we still make sure we run our numbers. If it stacks up, then we should definitely be looking to buy, because the property market's still a great thing because you've got an asset at the back end of it.
I totally agree with that. And it's something that you mentioned at the moment. If I'm buying and it's making me money, so that goes into the thing of cash flow. If I'm buying an investment, irrespective if it's property, shares, shares are a little bit different, but it's buying an asset that's bringing me cash flow, of whether it's down or up, whether the world market is down or up. But if it's bringing me cash flow and it's a right buy, it should be a right decision to do that. And I'm guessing at the moment with yourself and with the company, there must be a bigger push on trying to show people and let people understand their cash flow and how they can change their cash flow to allow themselves to get ahead, maybe a couple of dollars, $100 or $200 in their current situation, and or take it the next step to be able to say, okay, if I hold back in this key area, I can get positive by plus 500 a month, which allows me therefore to put that towards my property goal in 6 months' time.
Yeah, and Lawrence, when we're looking at the properties that we're buying as well, we're running our numbers and making sure that they are cash flow positive. And these properties are creating an income for us. Now, I guess the point I better make is that any property can be cash flow positive, because as long as there's an income on the property, if there's no expenses, so basically you don't have a mortgage against the property, it's going to be a cash flow positive property. But what we want to try and do is we want to be trying to look at a property and go, okay, well, if this property was leveraged, say it is 70%, or even, leveraged up even higher than that, which, based on LDRs, we're talking more about when the refinance happens. We're looking at positively cash flowing properties then. So how can we make sure that when we're buying properties, that we're ensuring that the rent is well outweighing any of our expenses? And, some of our clients, the minimum we're looking at is probably $500 a month per property, and we're talking, you sort of $200,000 properties.
Yep.
But I've seen some of our clients making sort of $5,000 a month cash flow just off one property, which is quite nice when you don't have to get off your couch to put $5,000 in the bank account each month.
But one thing I think, even for myself as a property owner and property investor, one of the biggest mistakes I made in my junior years, let's say, going down that path, was truly understanding what cash flow actually meant and what the whole package meant. When you buy a property, go, okay, let's just use round numbers for shits and giggles. Auckland, we're going to buy a house. It's $1 million. It's a $1 million mortgage, and I'm getting, let's say $1,000 a week on it. And we're going to, at the moment, it's 2.39 or something like that. So it's $24,000, and I'm getting, what's it, 52,000. Oh, I'm making a whole lot of money on this property, right? Yeah. You go, great. I'm doubling my money. But what you're not looking into it, and some of the novice mistakes around cash flow was, hold on, there's more than just the mortgage and the rent. There's repairs, there's rate and taxes. There's a whole lot of other things, that small, subtle things that you forget about. And when you've got big profits, great, it takes a little bit away. But when your profit's only $2,000 a year or $2,500 a year, you're making $50 a week, and you forgot about your water, you forgot about the rates, you forgot about a few other things that you got to put aside, maybe for some repairs, natural repairs throughout the year. That 2.5 all of a sudden is now not 2.5 anymore. Now it's a minus 1,000. Is that something you see with your customers coming in and going, not having their grips on cash flow as good as they should?
Yeah, 100%. And especially the whole negatively gearing concept. For me, negatively gearing, why would you want to lose money to have someone living in your house? Now, yes, there's the ability for the property to make money, but what we need to make sure is that we're buying properties that are making cash flow. Now, we talked about 2.39%. How good is that?
Yeah.
That's great. But what if we have a slight spike in interest rates, and you run your numbers based on 2.39% to create a cash flow? Suddenly interest rates go up a bit, and now you've got yourself a property that is actually going to be taking money away from you. Yes, there's a tax benefits, but really, it's very minor when we look at it. When we can be looking at that money and looking to invest into areas where there's, getting yields of 8% plus, 10%, sometimes even more, rather than some, that property that you just talked about there, which would have been around the 4 or 5%
5%,
year.
yeah, correct. Yep.
Yeah.
Sorry, John. I was just going to say to the listeners that's listening that might not be New Zealand or Australian based, 8 to 10% might not seem like a lot to you where you are in the world, but at the moment, our bank savings rates are like maybe a percent or two if you're lucky. So you're talking about 4 times bank, you're talking about 5 times bank from a yield point of view on a property, which is fundamentally is a good deal. If you're getting 5 times bank or even 6 times bank, you're laughing to the bank. But yeah, so that's a great great point there.
Yeah. And that's also on return on investment. So I get, what you're referring to there is how hard is your money working for you?
Yeah.
This is what we're talking about prior to even looking at the fact that you're adding value to a property. You're able to refinance up to that new finance level and actually pull a lot of your money out. And sometimes that return on investment can actually be infinite because we've actually managed to refinance all our money out of the deal or refinance our money into another property. So there's some real advantages when it comes to investing in property. Never mind the fact that it's probably the most tax efficient investment you can go with, is compared to a lot of the other ways of earning income.
Just on the side point, yes, it's the best way to reduce your tax, but a little small fine print, you got to have a specialist help you out with that. So Jono and the team can definitely do that, or you need a property accountant that specializes in that. Don't think by buying an investment property, all of a sudden your tax problem is going to go away. You still got to learn, you still got to realize what it is, and you've got to ask a specialist in key areas depending on what you bought, whether it's an apartment, a house, a unit, and so forth, because each one of those differ in what they can do. Now, something you mentioned a little bit earlier, Jono, and it's something which I've explained to a few people when I've spoken about property, and it's one of the strangest things. So I've bought my first house over 10 years ago. Has been the only house I've ever purchased with actual cash, money in the bank. Since then to now, and X amount of houses, I'm not going to say how many, but I have used something they called leverage. I have leveraged my existing portfolio or equity that I had there to be able to purchase the next property. So which fundamentally meant to normal terms is I went to the bank and said, I've got an X amount against my house. It's worth Y. There's a difference of cash. Can we utilize that and leverage that component and buy a second house or a third house? And they say yes, if it's at the right numbers. And it's a crazy thing that people go, hold on, so you don't spend $1, you don't spend any money to buy another house? And you go, no, you don't. If you understand what leverage is and how to leverage.
Yeah. And, this is the reason a lot of our clients are able to buy multiple, talking 4, 5, 6, 7 properties sometimes in a year by buying right, creating equity so that you can go again and again and again. And for a lot of people, when they start investing in property, they potentially own their own home. So especially in Auckland, if you've owned a home, say over the last 10 years, very good chance that it's increased in value by a fair whack. Now that increase in value is equity that you've created for yourself. Now there's something called usable equity. Now this has to do with how much you can borrow against the property. So if we're able to take the difference between how much we owe and how much we can borrow against the property, that there is usable equity. Yep. Now, if you leave that in your property, what you're doing is you're saving yourself, 2.39% of interest. If you look at it in a big scale of things. But if you took that, let's say it was $200,000 and you took that money and you started to leverage it against the loan to value ratio on an investment property, what could you be buying with that?
Yep.
And what could that property then be creating an income for you? And you do the same concept again. If we create equity, if we buy below market value, you leverage again. And it's a big snowball effect, property investing. And it can really change your life because these properties are just, increasing in value, creating a cash flow. And there's a reason I love property.
I know you guys have shared the stage with Grant Cardone. I'm a massive fan of his around the property game. And I just wanted to mention him quickly because there's one example he gave, and I'll never forget it because I saw it live. And just what you said about at the moment, if you leave that cash in the bank, it sits there. You don't pay the interest on that amount that sits there. And his example that he did live on the show, and I'm sure, Johnny, you've seen it, he took $100 note. And he took $100 note to the crowd and said, "Hey, this $100 note's worth represents $100,000. That's $100,000 that you've paid off against your house that is sitting there in the bank that you do nothing with." And he put it down on the table and he says, "Okay, I'm going to talk for the next hour. And when I'm finished, we're going to see if that $100, which represents $100,000, is still going to be the same value." And fundamentally, it is, because nothing's changed to that money that's sitting in your bank that you're not using. But and how that, as you said at the moment, but if you take that out, if I take that $100,000 out of the bank and I purchase and I leverage it into another property, all of a sudden that $100,000 has now become $120,000, $130,000. It is actually increasing and working for me. And that's a sort of a mindset where some of the older education providers or property owners would always say, "No, pay off my mortgage, get to zero mortgage. I want to have no mortgage on the house, and my house is worth $1 million." I've met some friends and they're like, "I'm debt free." I'm like, "Why?" Why? Why? Well, look at that. They're debt free and they own one home. And I'm like, "And why?"
Yeah.
Why isn't that working for you?
Yeah, and then and you have to head off to work 9 to 5 to make sure that you're creating that income so that you can still sustain your lifestyle. But what if you took that equity and leveraged it into creating the lifestyle that you want? And a term that we use a lot is financial freedom, and that's what we want to try and achieve out of it. And Cardone, he's a character. I'll never forget the video he did with my business partner Dave backstage. Hell of a personality. And one of the things that I find really interesting is that he is so against owning your own home.
Yep.
Which is,
it's against our own principles, right?
It is.
I struggle with that personally at the moment. I've got a dilemma of wanting to rebuild my family home, and rebuild in the sense of to a house that likely, to a style that's never been really seen in this where I am at the moment. And it's like, I can just hear Grant in the back of my head going, "Why? Why spend all that money? Why not go and rent one? Why not, go?" Because he always says to the people that don't know, he's always got a saying that buy where it's good to invest and rent where you want to live. But it's a hard one to swallow, though.
It's massive, and for a lot of clients, we find them coming to us and they really want to buy that home because, well, I guess it becomes emotional.
Yeah.
And we really want to be trying not to buy emotionally, because we're buying emotionally, we're probably overpaying.
Correct. That's where a lot of times when I buy rental properties and we have to get tenants in, the wife leaves it to me, because she goes, "I don't want to get involved when we pick the tenant," because then she gets emotional. She goes, "Oh, let's pick this person or that family because they need an opportunity." And once that sort of comes into your expression or thought, you're going to get caught out at some stage, because you got to remember it's business. So you don't want to go and give someone a business opportunity that might fail in 3 or 6 months' time, and then you're left with the property with no tenants for a month or 2 months and cost you a whole lot of money.
Exactly. You've got to take the emotion out of it. We've got to run it like a business, and that's the difference between I guess the term mum and dad investor and someone who's looking to become a professional investor and really change their life. Because property can really do that for you. It can give you the freedom. It can create the wealth. Historically, over the last 100 years or so, we've seen property double in value every 7 to 10 years. And if we're buying property where we don't have to worry about whether it grows or not because we've got the cash flow, we can create a better future for our family. And that's what I'm all about. I'm like yourself. I'm originally from South Africa, and my parents sacrificed a lot to move to New Zealand. So for me, it's all about, trying to give back to the family, and that's what property gives us the vehicle to do.
So we spoke about a little bit earlier about leveraging, against your existing property once you're in there, and to get into a second investment property or so forth. Then you get in that, you spoke about also as well about the mom and pop investors, but then you also get into the next level where I find exceptional a lot of young 20-year-olds that know what they're doing in this game already, of actually trading property, of going in, buying, holding, or actually trading, holding for a while and then on selling as well, and that whole different mix of trading property. What's your view around that space?
Yeah, trading property is an interesting strategy, and for me, it was the way that I actually got started on my investing career. The first couple of deals that I did were trades, And I still love the idea of trading property. I just set myself a little bit of a rule now where I don't trade with my own money, because my own money, I believe, should be going into my buy and hold portfolio.
Yep.
But trading can be very lucrative, especially once again when we start to look at the whole leverage concept. Because if we are doing let's take round numbers again, a $500,000 property, and we want to make 10% return on investment, so 50 grand. Now, I'm not taking into account any taxes or anything, I'm good at my maths, but that might be taking a bit far in this. And, we're making that 50 grand. We buying for 500, but that's not how much we're putting in. We're actually now leveraging the bank. So we've got, say, 30% in there. So we've got 150 grand in there, making 50 grand. Maybe there's a bit of reno costing. Let's put 50 grand reno, 200 grand in there, make 50 grand. That's a 25% return on investment, which is awesome.
Yep.
But trading property, and this is, I guess, where the kicker comes and where it can be really profitable, is you actually are able to do that within 3 months.
Yep.
And now we go, okay, well, actually, we have managed to make 25% in 3 months. So what is our actual return on investment? What's our annualized return on investment?
Way higher.
We're at 100% return on investment. Yes, you're going to have to pay tax when you're trading property, because if you're buying and selling within those 5 years. But still, we're making a business that's making 100% return on investment.
Yep.
Go find one and bring it to me, please.
I mean, totally. So you call trading property, you call it flipping property, talking about buying and on selling without doing any renovations or doing renovations. I've done that myself a handful of years, a good few years ago, before the Auckland market went, crazy as it is now. There's still opportunities. There's less opportunities, I think, per se in Auckland, as your buy price is quite a lot higher. So it takes a lot more to jump into the opportunities and that sort of stuff. But where a lot of guys are making, paying attention is the other cities or the smaller towns that we have across New Zealand, where instead of the average house price being $1 million, the average house price is $300,000. So therefore, my leverage to get a house there is maybe $30,000. I buy a $300,000 house, I do a $10,000 facelift, and I now sell it for $350,000. So therefore, as you said, the numbers, I'm 30 grand into the bank, and I've made 30 to 50 grand profit in 6 weeks or 12 weeks. So I'm making 100% in 3 months, and then you've pushed that over a year, it is way bigger. So those opportunities are there if you understand how to buy right, firstly, fundamentally, understanding your marketplace where you're selling, because biggest mistakes people make in flipping properties, they buy a house, do an amazing renovation, and they've overcapitalized in that local area. And no one's going to pay 10% above the local market area price because, just no one's paying that price in that area.
Yeah, and often that comes back down to the emotion. Again, you've got to treat it like a business. And if you're going into that renovation and going, it'd be quite nice to do this, or it'd be quite nice to do that, not going into it going, well, I need to do this in order to get it to a level, because I know that if I do this, I'm going to sell it at this price.
Yep.
And probably one of the key elements, and I've mentioned this from stage a couple of times, if you've seen me speak, is that if you are at selling a property and you're working out what that selling price is, you don't go with, hopefully I can sell it for this. You know it is your bare minimum that you're going to sell it for. And if the numbers work off that, well, then the deal stacks up and it fits your buying rules, go for gold. But don't let the emotion take over when you're doing trading, because it can really hurt you.
But that's
one other point, which is very important when you're trading, is making sure that there's an exit strategy. So making sure there's enough potential to rent it out, that if it doesn't sell, there's an exit strategy and you're not going to be hurt.
That's what I was just going to say. People that's listening at the moment, some people can jump into this deep end without guidance, and you'll survive a few times. But don't jump into this deep end without insights, the likes of the Wealth Mentor or from their organization that will support you, or anyone else that will support you, a top broker, accountant, all those people, your lawyer as well, because you are going to get caught. I did a 3-year stint on properties. Some of them were good, some of them were bad. You don't win on every single one of them. And if you don't have the right guidance, when you lose, it hurts a lot. And that hurt can destroy 2 or 3 good buys beforehand. So all of a sudden, the last 9 months or 12 months was for nothing. All the time you put in there, all the risk you put on yourself per se, might not be personal risk, but it could be business risk, and it comes to nothing because you're not taking guidance from the right mentorship.
Yeah, I mean, having the right team is vital. The whole concept of your power team, whether that is your mentor, and having a mentor that's actually been there, done that, not a career mentor, someone who's having to, essentially get themselves a job. We're looking for people that are in a position that you want to get to. The whole Robert Kiyosaki concept once again. So if you've got the right mentor, and we can create a team around you of experts. Now, for me, there's, let's take, for example, accounting. Property is a very, very specific thing. And if you don't have the right property accountant, they can really make a hash of things. Because if you can get the accounting part right, when you're talking about the way that you structure yourself so you can be more tax efficient, but also structure yourself to keep yourself safe. And these elements are so fundamental when you come to investing in property. Make sure you got the right team around you. Make sure you got the education behind you.
I totally agree with that. It's something I've learned. I've made mistakes, and I have a team, or I have the right people around that I feel at the moment. And it doesn't mean they're always the right people. I'm also evolving around. So I've transitioned to different people as my time has gone around property and my business and what I'm trying to achieve, because, sometimes you pivot, and the way you pivot is no longer aligned with the part of your team. So you need to find someone that's, aligned with your team, more as you pivoting across there.
Yeah, I mean, your network is so important, and that's something I'm so proud of with the Wealth Mentor Network, is the amount of people that we have around us doing extraordinary things. I just saw, just before we jumped on, one of our clients in the paper about this massive story about her motel that she's converting into this amazing residence. These are the sorts of people that you want to be hanging around, so that you are taking yourself to the next level.
So one more thing, we're coming close up to the 30-minute mark to talk about is first properties that people own into sort of transition into investment properties, or sort of, we spoke about a whole lot about it at the moment, but what's the sort of guiding point, a basic guiding point to leave people with at the moment, going first property, taking the next step into investment?
Yeah, well, again, it comes back down to the equity and making sure that you utilize that equity correctly, utilize it to create income. If you're in a position where you haven't bought your first property, then it's a matter of making sure you understand what your long-term goal is. Because if you're in the position where you're buying your first property, and well, again, it comes down to an emotional buy, and we're buying a property that's not giving you the ability to create equity, or you're buying equity, that then is going to hurt you for a very long time, or not put you in a position that's going to get you into your forever house.
Yep.
It's really important that you look at that first property or the second property, whatever it is, as a stepping stone to that forever house, because that really is going to be leveraging that equity to get you to where you want to get to.
Oh, I love it. Something I didn't mention, the last couple of episodes, I'm making sure we always keep our stuff nice and short and sharp to 30 minutes. We're coming close there. Something I didn't mention in the very beginning of the episode is we've got a massive surprise on this episode and this episode alone. Jono's hiding something there. So to anyone that's listening or anyone that's watching, I want to leave it to Jono for him to have a couple of minutes and tell him what the surprise is for you guys.
Awesome. Thank you. I mean, this is pretty exciting. So at Wealth Mentor, we run a 3-day event, which is called our Cashflow Masterclass. If you've seen my business partner, David Leon, speak from stage, he's the one who spoke alongside Kiyosaki and Branson and Cardone. He's actually the lead speaker on the 3 days. It's a hell of an event that we run for 3 days. We have a lot of fun. We have speakers from all around the country doing amazing things with investing. One of the speakers I know for a fact has built well over 600 homes. So, the wealth of knowledge that we bring into the room for 3 days is extraordinary. And it's 3 days about learning from deals that are current. So we get our speakers to present current deals, break them down, understand them, and really make sure that the fundamentals are there. All the way through from going through tax and asset planning, like I mentioned before, vital, understanding how you're structuring yourself. Are you structuring yourself safe? So many people are buying property in their own names. There is such a better way to be doing it for yourself for your investment property. So we cover off that. We play games. We have a lot of fun. And what I want to do is I want to put a couple of tickets out for one of the listeners to come along. Now, the value of these tickets are $3,500 for 2 tickets to come along. We do have a networking event, which does involve drinks, so you get to network with our team. We get to have a lot of fun, and I hands down believe it's the best event because it's where I started, which is quite cool for me to now be in the position I am. But I started attending one of these events, and it's completely changed my life. And I'd love to see a few people along at this awesome event.
Jono, that's absolutely amazing. I've been so excited for a few days when Jono told me about this, that I've been waiting for people to hear. So if you heard that correct, there's a 3-day event. We're talking about the first 7th, 8th, and 9th of August, currently in Auckland, New Zealand. It is a 3-day cash flow masterclass that Wealth Mentors put on. It is 2 tickets that I'm giving away on the show, not at the second, but as part of this actual episode. And it's worth $3,500. You heard me right. That's $3,500, 2 tickets that's given away. And if you're watching at the moment or listening, so if you're listening on the audio podcast, you got to come over to YouTube, because the way you enter is at the bottom of this video in the comment section is, I want you to put down a comment on what is your financial investment goal over the next 12 months. So between July now and July in 2021, I want you to put a comment down there below. What is your investment goal over the next 12 months? I'll be running this for a handful of weeks. I'll put in the description how long, and I'll pick one person to get these 2 tickets away. It's an amazing 3-day opportunity worth $3,500. And like I said, I am pumped. I'm excited. there's very few times on the show that I get the giggles. This is just amazing. John, a massive thank you to yourself and Wealth Mentor to be able to give my audience this opportunity to come over and see what you guys do. Like I said to everyone, I've seen this company on stage with the best in the world. Robert Kiyosaki, Richard Branson, Grant Cardone, they share the stage and they give New Zealanders, Australians, and across the Australasia's area the best insights how to become financially free around property and guidance around investments. But before the end of the show, before the end, Jono, if there's one last thing you want to leave everyone with, and then also letting them know where they can find you on social media.
Absolutely. Last thing is, make sure that you are getting yourself educated in a way that's going to be able to give yourself the future that you deserve, the future that your family deserves. Because, as I said before, I'm a product of it, and I'm really excited to be now able to bring it forward and change other people's lives. You can find me on jonofrankle.nz on any of the social medias. So LinkedIn, Instagram, and Facebook. As well as that, check out wealthmentor.co.nz. I've got all the information on the 3-day event up on the events page there. A little video of David Leon, who's my business partner, explaining exactly what's going to be covered off on the 3 days. Would love to see you along. It's been an absolute pleasure. Thank you so much for having me.
Jono, thank you so much. And to everyone else that's joined the Wolf of Queen Street, either on the audio series or the video series, as I've always said, there's nothing more asked too much of you. But if you found something insightful, something valuable from today's episode, just let someone know, especially this episode, because there's a massive prize to give away. So make sure you share it out. Make sure you comment below. But at the end of the day, wherever you are in the world, stay beautiful, stay powerful, and stay safe. Until next time.